Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is a corporate interview. We do quite a few of these, but this particular company is quite interesting because over the past year, its stock has risen by over 100%. It's more than doubled. And in fact, it's had a stellar year to date so far, if you look at 2023 as well. Over 65%, in fact. I'm talking about BLS International. I'm joined by the joint managing director of the company. We've got Shikhar Aggarwal joining in. They've had quite a good first quarter as well. Shikhar, thanks so much for taking the time. And I thought that this would be a good opportunity to catch up with you because I don't think that we spoke after the earnings. You've managed, I think, to achieve that 20% EBITDA margin mark that you've worked towards for a while. But more than anything else, I think if you look at the year-on-year growth in the first quarter, it's been quite good. What are the factors that are leading to that and break this revenue pie down for us?
Thank you. So as you know, during the first quarter, we had achieved a revenue of 383 crores, which is a 40% growth compared to similar quarter last year. And at an EBITDA level, we had achieved an EBITDA of 80 crores, which is 140% growth compared to similar quarter last year. If you see the factors leading to this revenue growth, last year we had just reached 70% of the pre-COVID volume that we had done in 2019. During this first quarter, we have seen certain revenue coming in from countries like China, which was practically negligible last year. We have gotten certain increases in service charges. Our prices of additional services also increased. So that all these factors have actually led to an increase in margin of 20% also. A lot of these new contracts that we had won in the last few years, some of them have been deployed, some revenue have started to come in from that. So I think these are all the factors because of which we have reached this margin level. And also, the expenses that we have reduced during COVID, some of this, some of the new way of business we have learned. So some of those expenses have not come back till now. So that is why, now the margin that we've achieved, we look forward to maintaining and even improving that in the coming few years.
So if I look at the segments that you operate in, and I'm looking at your investor presentation here, there is visa and consular services which you've split, and you've talked about digital services. For those that are not familiar with this, could you explain to us how this works? Visa, essentially, you're talking about the e-visa services, right? Where Indians traveling abroad come to you, they submit their documents and you facilitate, right?
No, actually, visa and consular services, which is around 80 to 85% of our entire revenue of the company, we are present in 64 countries and we work with more than 40 client governments globally. So Indian government is one of our clients, wherein we work for the Indian embassies abroad, for Indian diaspora abroad, applying the passport renewal and foreigners coming into India. Same way we work for different governments, like we recently won Italian contracts. So we work for Italy government in 6 countries now. So for foreigners going to Italy from those 6 countries, have to go to our centers, for example, countries like Kazakhstan, etc. We have re-won our Spanish global contract again. So globally, anyone who goes to Spain has to apply for a visa at a BLS local office, be it in London, New York, Delhi, Morocco, Algeria. We work for Hungary government. We recently won a contract for the Polish government. We also work for the German government. So we work with more than 40 client governments in 64 countries in our visa consular service space. We are one of the largest companies in this field and the only Indian company. And in the digital service segment, which is around 15 to 20% of our revenue, also, we have achieved a revenue of 83 crores this quarter, which is a growth of 140% compared to similar quarter last year. This business comprises of our e-governance, which is the citizen service business, and the banking correspondent business. This business also we are seeing a supernormal growth and are in the process of listing this subsidiary, which is BLS e-services. We have already filed the DRHP. Depending on the SEBI approval, we plan to do the listing within a couple of months.
Okay, so I was actually going to come to that. So what is the idea and how much you're going to be raising in this IPO? I believe you're holding about 60-odd% stake, 69% stake in this subsidiary, right? So what will be the post-IPO holding in the company?
Correct. So BLS e-services, we are actually, there is going to be a primary issue of 2 crore 41 lakh 30,000 shares. So money will be coming to the company. Post the IPO, BLS e-services will continue to be a subsidiary of BLS International. The money that we will raise, valuation still has not been finalized. Money that we raise will be used for the organic as well as inorganic growth of the company. We are seeing massive growth in both the visa counselor service business and e-governance and banking correspondent business, but we do not want to utilize the profitability of one business in another business, because we want to invest the money that we earn in visa counselor business for organic and inorganic growth in that business. So whatever money that we raise through the IPO will be used at acquisition opportunities that we are looking in e-governance and bank correspondent space within India. And also there are few other tenders in the pipeline and few other things that are in the pipeline through which we will be opening centers across India. So if you talk about BLS e-services, now we are present in 28 states and all 8 union territories of the country with more than 50,000 centers providing services to 6 to 7 lakh people every day.
Okay. So that's the part on the e-services business or the digital services business. But if I speak about the major chunk of your revenues, which is coming from the visa and consular services, I've read about the fact that you have quite a large part of that coming in from Russia and China. And you've said also that China is coming back. What is the expectation for the rest of the financial year, though? And what is the initial trend that you're seeing in the second quarter in terms of the contribution of each of these geographies?
See, if you see our pre-COVID volume, whatever we were doing, and last year we did 70% of those volumes. And because the countries like Russia and China were almost zero. So globally, Russia and China contribute around 30% of our volume. And that also, we had achieved 100% growth year on year only on the basis of 70% of the volumes. Now, during the first, second quarter, we have seen gradual opening happening in China, where we have opened our offices all across the country. We had more than 15, 18 offices across different cities. We have opened them up. We are seeing volumes coming in back. Regarding Russia, the volumes are still negligible. So from China, I think before the year end, we should see pre-COVID or better volumes coming in from China. The revenues that we have achieved during the first quarter, we wish and we try to maintain those revenues and profitability. And in the coming years, the contracts that we have already won, that we are starting to deploy, revenue and profitability will also start coming in from that. And on top of that, if you talk about the opportunity, if you see the multi-billion-dollar worth of contracts that are up for renewal, in which we are bidding for, some of that we have already won, like different Italian contracts, German and Polish contracts. Multiple other contracts are up for bidding, in which if we win certain market share, there will be definitely a boost to revenue and profitability of the company.
How difficult is it to get these contracts, and what is the term of these contracts on average in terms of years?
See, we started the company in the year 2008-7, and now we have reached this stage. It took us 15, 16 years to convince different governments across the world as an Indian company, going to European and American governments, to convince them to give us work. Once we perform their services year on year, that is the reason we have renewed our contracts, like with the Spanish government. Again, after 6 years, in which a lot of these economies are dependent on tourism in a big way. So typical duration of these contracts are 5 to 7 years. As you know, recently we have won big contracts, like with the German government, which is for 7 years, where we opened 10 offices in the US and 2 in Mexico, with the Polish, with Italy, with Hungary. So we also work for the American government. So different governments, actually, it was very difficult for us as we were starting a company. But now, since we have matured, governments trust us, we perform the work. So now we have a good chance. We are qualified for all these tenders that are coming up for renewal. And governments have also mandated a policy where they want to divide the world into multiple players. And there are only a handful of niche players, since there is a big entry barrier in this business. So I think we stand to gain in the next few years, with the volumes also driving up. And also there's a new element of new governments which are outsourcing for the first time. For example, they recently won contracts for governments like Philippines, Brazil, which were never outsourced. So there are many new governments also wherein we are looking at outsourcing.
So give me a sense of what is on the cards for this particular financial year. How many large contracts are up for renewal that you are bidding for or have bid for?
See, first of all, we talk these contracts, winning them takes years, So we've been working on many contracts for the last 1-2 years, and the opportunity size is upwards of $1 billion. Some of that has been fruitalizing. We have been winning some of those contracts. So, even if we win the contracts, some of those contracts this year, maybe revenue starts coming in. We do deployment this year or next year. I'm not too sure, and the revenue starts coming in. But whatever revenue that we have achieved in the first quarter, we wish to maintain those numbers. If there is an increase from China and the new contracts that we have won, the deployment comes in full swing, like with Italy, Poland, and Hungary, then definitely there will be a further rise in revenue and profitability of the company.
Okay, now coming to the profitability and coming to that 20% EBITDA margin number, you mentioned that there is a lot of opportunity on the revenue side. So that's clearly one aspect. I think the other aspect is going to be value-added services, which shows up the profitability as well. But what you've also mentioned is the cost side, where certain cost efficiencies that you managed to achieve in the COVID period, you've carried forward now. Is that something that is sustainable though? And how are you going to manage, considering that you are bidding aggressively for all of these contracts? I would assume that you would have to increase staff strength.
Correct. So see, if you talk about also briefly on revenue and profitability again, we've gotten the contracts that we're managing now are at much higher service charges. New contract that we've won for Spain is at higher service charges. Value-added services have increased. Regarding the costs that we have managed to achieve, cost rationalization in COVID period, we understood that there is a new way of working. The new contracts that we have won, we have utilized our existing office network across the world. So economies of scale have come in. European governments have a clause wherein you can share the same offices. So definitely, that has led to a rationalization of cost and increase in margins. Definitely, the new contracts that we are bidding for, we need technical people, we need business development people, we need marketing people on the ground, we need different IT people. Definitely, costs will go up, in the short run, but that will also be, kind of offset by the revenue increase that we expect. So that is why we expect the margins to continue. It has been with great difficulty that we've increased this, rise in margin to 20%, which is a major increase from 15-16%. But I think what we see is that, this should maintain, and in the coming years with new contracts coming in, this should improve.
Okay. I also understand that if I look at sequentially, the revenue number is lower on a sequential basis, but I understand that a lot of travel and a lot of this tourism related activity is going to be seasonal in nature, and therefore I have looked at the year-on-year number. Having said that 40% growth in revenue, I would think that there's going to be peaks and troughs, right? So help me understand for the full financial year, what is the expectation on the revenue number, on the top line number, and you're confident of achieving 20%. So because I'm asking now, because the next time I speak to you after the second quarter, I'm going to ask you about that 20% number.
No, definitely, the numbers are, if you see the last 3-year growth, we have done at a PAT level, we have done 100% year-on-year growth,
sure.
And you already, if you see the first quarter numbers, there is a growth of more than 40 to 50% in EBITDA, PAT, and revenue of the company. So definitely, compared to last quarter, there is a slight dip because this is a seasonal business. After COVID, also seasons are getting streamlined. Some parts of the world are opening up, some are, so definitely there was a change. But quarter on quarter, if you compare to last quarter, we definitely see an increase in revenue this year also compared to last year. Regarding the EBITDA margins, we are a very conservative company. This all numbers also after we achieved, we could declare. So having said that, we are always striving to increase our margins, control our costs, and we wish that we maintain these EBITDA margins. But as we win more contracts, as we have economies of scale that come in, where we utilize existing offices, existing infrastructure, existing manpower, then it's a simple accounting, system wherein, the revenue increases, but costs after a certain level will not increase with the same level. So definitely, in the coming years, we see certain EBITDA margin growths. And maybe, if you're, I can also add on that, we're also looking at some inorganic acquisitions in the visa counselor space. We have around 650 crores of cash that we have earned in the last 12-15 years, and we have been very conservative. We have been a dividend declared company from day one. We also acquired our first big acquisition last year. So we have done 2 acquisitions till now. Now we are also looking at one, some of the acquisition visa counselor space. If that happens, then probably, we could combine more of our offices, get into more new governments, and actually, get a more advantage of economies of scale.
This year itself?
So we are constantly looking at different opportunities. We're conducting due diligence, but our scale, wherein we want to recover our investment in 5 to 6 years, and whatever extra benefit that we get, 1+1, if we can make 10, whatever that benefit is, so we look at companies accordingly to that. So we are always doing due diligence, but it could maybe this year, next year, or next to next year. I don't know exact now time, but we are aggressively looking at opportunities, in the near future.
You're keeping us guessing. So is it more likely this year or next year, and less likely in the year after that? Give us a sense.
I think from where we stand, we want to do an acquisition every year, with the increased cash flow that we expect coming into the company from in the next few years. So definitely, effective utilization of the cash, will be deploying it in acquiring new contracts with different governments and also acquiring companies in the similar field. So definitely, we see us, now the scale that we have achieved, we see us expanding our base and scale from here on, where we see multiple outsourcing opportunities across the world, in Latin America, Africa, which is completely a virgin territory. A lot of developed governments like UK are outsourcing different parts of their services, right from NHS. So there is enormous opportunity in our industry.
Fantastic. Shikhar, pleasure speaking with you, and I'm glad that we managed to catch up. I look forward to speaking to you after the second quarter earnings as well.
Thank you so much for inviting us.
All right, viewers, there you have it. The management of BLS International. It's going to be a stock to watch because there's an IPO coming up as well as of the subsidiary that Shikhar mentioned, and the earnings are certainly something to look forward to. Do stay tuned. Lots more coming up over the course of the day, and this is BQ Prime.